Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're going to be discussing Upstart's personal loans and how you can be approved for up to $75,000 even if you have bad credit. Most banks and lenders will turn you down without a second thought if your FICO score dips below the mid 600s. But Upstart is a financial technology company that's designed a system that will approve borrowers based on other criteria other than their credit scores. You can receive funds as quickly as the next business day. In this video, I'll walk you through the unique way Upstart evaluates applications, the unexpected documents they sometimes might ask you for, and the silent deal breakers you need to be aware of before accepting any loan offer. By the end of the video, you'll understand not only how Upstart works, but how to use their loans strategically to rebuild your financial future. So without further ado, let's get right into the video. Upstart is not a bank in the traditional sense. Instead, it's a fintech platform that partners with more than 100 banks and credit unions to provide personal loans. The amounts range from as little as $1,000 to as much as $75,000. For years, their website displayed a max amount of $50,000, but recently, updates have confirmed that the ceiling has been raised to $75,000, making Upstart an option for borrowers seeking larger amounts. The real difference between Upstart and traditional lenders is how they make their decision. Now, banks often rely exclusively on your credit score. If you fall below their minimum threshold, the application is rejected automatically. Upstart, on the other hand, will use artificial intelligence and advanced underwriting models to look at the full picture. They factor in your job history, your level of education, your income, your bank activity, and even your location. This holistic approach means that a borrower with a credit score of 620 but a strong six-figure income may have a much better chance than someone with a higher score but no steady source of earnings. Once approved, most borrowers receive their money within 1 business day. When you take a loan through Upstart, you have the option to repay it over 3 to 7 years. Interest rates range from 6.7% to as high as 35.99% APR. While the lowest rates are reserved for stronger applicants, what makes Upstart attractive is that even people with damaged credit still have a shot at being funded. However, that doesn't change the fact that Upstart's APR cap is on the higher end. There's also an origination fee that can fall between 0 and 12%, which is deducted from your loan proceeds before you receive the funds. For example, if you're approved for a $10,000 loan and the origination fee is 12%, you will actually receive $8,800. The specific percentage is determined by factors like your income and other application information. Other fees include a late fee of 5% of the unpaid amount or $15, whichever is greater, as well as an insufficient fund fee of $15. But there are no prepayment penalties if you want to pay off your balance early. You can do that without worrying about any additional cost. And borrowers can also check their rates without hurting their credit score with a soft pull in just a few minutes. That means you can see what you might qualify for without impacting your credit score in any way. Only once you accept an offer does Upstart conduct a hard pull, which then appears on your credit report. So let's discuss what it actually takes to be eligible for an Upstart loan. First, you must be a U.S. citizen or permanent resident who currently lives in the United States. Applicants need to be at least 18 years old. Although there's a slight exception. If you live in Alabama or Nebraska, you'll need to be 19. You'll also need a valid email address and social security number, since those are required to verify your identity. Next, you have to show that you have a source of income. That could mean working a full-time or part-time job, having a full-time offer that begins within 6 months, or relying on another consistent source of income. Upstart is flexible in what they accept, but they want to see that you'll have the ability to make your payments. On top of that, you'll need to have a personal bank account at a U.S. financial institution, since that's where your loan funds will be deposited and your payments will be withdrawn. There are some restrictions tied to your recent credit activity. For example, you can't have filed for bankruptcy within the past 12 months. You also need to be current on your accounts, meaning no active delinquencies on your credit report. In addition, Upstart prefers that applicants have no more than 6 hard inquiries in the last 6 months. Although inquiries for student loans, car loans, or mortgages don't count against you. Now, let's talk about some of the minimums. Upstart does not require a specific minimum credit score. The income requirement is relatively modest as well. You'll need to show at least $12,000 in annual income, which can come from employment, alimony, retirement, disability, Social Security, child support, or even self-employment. Upstart sometimes will perform a hard pull on both Equifax and TransUnion, so you want to be aware of that. Again, they pull from multiple banks and credit unions. If your report already has a lot of recent inquiries, this can cause some problems. Keep in mind the origination fee needs to be considered as part of the true cost of borrowing. Even when the APR looks attractive, the fee effectively increases your cost. The stated reason for borrowing can also influence the size of the loan that you receive as well as the interest rate. Borrowers who select debt consolidation often receive higher approvals and better rates. Those who choose discretionary categories like travel or weddings tend to see higher APRs. And finally, interest rates above 20%, in my opinion, should almost always be avoided. While Upstart offers competitive rates for many, they can also extend offers at the very top of their range, and I don't think it's worth it. Accepting such a loan without a clear payoff plan can be financially dangerous. Before we take a look at the application process, let's compare the pros and cons of an Upstart loan. One of Upstart's biggest strengths is the way it evaluates borrowers. Instead of relying strictly on credit history and current income, the company will use alternative data. Another highlight is that Upstart works with a very broad range of applicants. They will consider borrowers with both bad credit, thin credit histories, and even no FICO score whatsoever. Technically, they accept scores as low as 300, which effectively means there's no minimum requirement. Borrowers only need to demonstrate at least $12,000 in annual income, and this does not have to come from a full-time job. Sources like retirement benefits or Social Security, disability payments, child support, alimony, or even self-employment, they're all considered. Speed is another area where Upstart excels. Most applicants receive a nearly instant decision after applying, and funds are typically deposited within 1 business day. While there are plenty of positives, there are also some downsides to weigh. The biggest one is the origination fee. Many lenders charge this, but Upstart's maximum fee is 12%, and that is definitely on the high end. Another drawback is that Upstart doesn't offer a discount for autopay. Sometimes other lenders will offer this as an incentive for making those automatic payments. You'll also find no option for joint or co-sign loans, which can be a deal breaker for applicants who might need a co-borrower to qualify or to secure better terms. My final takeaway is this: if you're someone who has struggled to qualify elsewhere and you need access to fast funds, then Upstart is a lender worth exploring. But if you're primarily looking for the lowest cost loan, or you need special features like joint applications or automatic creditor payments, you may want to compare alternatives before making a final decision. So currently we are on upstart.com. In order for you guys to actually get qualified for this, I suggest you select check your rates. Then you would enter the loan amount that you would like to qualify for. So if you want to do the max amount of $75,000, then you can enter that here. Now, personal loans through Upstart only take 5 minutes to check your rates. And again, no prepayment penalty. And they say it's 33% lower than a traditional model, but you want to check your rates and see what they're actually offering you. Now, remember, you want to select the best option to get the lowest rates. I would suggest using debt consolidation. They don't pay creditors for you. They'll send the money to your checking account. You can also look at a variety of options here, but I would say the more frivolous the reason, the higher the APR will most likely be. So you're better off just going with debt consolidation just to play it safe. You'll want to enter your legal name and information in order to get started. Then you'll be brought to a screen to enter your email address. After that's done, they'll ask you for your date of birth. Then they're going to ask you your current street address. Afterwards, they'll ask you to provide them with a phone number. You'll also be asked for your highest level of education. Now, depending on the answer to this question can actually change what you get for your rates. The higher the education level, from what I've seen, it seems like you get offered better rates. Now, if you do decide to put your education level, they will ask you for the school, the area of study, and the graduation or expected graduation year. So if you're currently a student, this does still apply to you. You'll then be asked for your primary source of income. So where are you getting a majority of your money from? Currently, if you're employed, that would still be the best answer because it shows the most stability, and you can choose whether it's hourly, salary. You can put independent contractor if you would like. You can also put starting a new job within 6 months, but again, that looks very shaky. Self-employed, partnership, LLC. The other one was sole proprietor, other, or none. All right, so then you guys have the option of doing that. If you decide to pick hourly, which I would think is the most common, you would then put all of your employer information, company, job title, when did you start, your hourly rate, how many hours you're working per week, any additional compensation, like maybe you're getting tips, and then your paycheck frequency. Now, once you entered all that information, they're going to ask you how much money you currently have in your checking or savings accounts, or if you have an investment account like an IRA, a 401k, mutual fund, index fund, anything like that. Enter this information here. They'll also ask you if you've taken out any new loans in the past 3 months. Now, if you've had any recent loans, this could affect your approval. Again, the more debt that you have, the more unlikely you'll be able to pay it back based on your debt to income ratio. So if you have had any recent loans in the past 3 months, that could get you denied. Now, once everything is said and done, you'll be brought to a screen that says, please review your information. You'll want to double check it, make sure that everything is accurate, because you can be disqualified if some information does not match and you don't want that. So again, just double check and make sure that everything is correct. And this is the very end of the application. It's going to ask you to agree and check your rates. And again, this will not impact your credit score whatsoever. I want to thank you guys so much for watching this video. If you got any value from this, please like the video and subscribe to the channel. I drop videos like this usually 3 to 4 times a week with data points and information to help you grow financially. Drop a comment if you've ever used an Upstart loan or if you guys were recently approved for Upstart. Include your data points as well. That's going to help other people also get approved for this same exact loan who may be in your situation. There's also a link in the subscription to join My Success University. It's a group where we offer information like this, as well as a lot more discussions that go on an almost daily basis. So I highly recommend that you join. It's growing very, very quickly. And once again, thank you so much for watching this video, and you guys have a wonderful day.